Hi everybody, I just wanted to give you a quick walkthrough of question 1 from your chapter 12 homework assignment. Take a look at what I did here just to prime this. You may want to do this also yourself if you wanted to follow along, maybe pause the video. But basically I copied the balance sheet over into an Excel sheet so that we can manipulate and figure out, do a little bit of the math, and then build out our cash flow statement. So what they did is they gave you a balance sheet, and they gave you the 2012 balances, and they gave you the 2013 balances. And our goal now is to figure out how did each of those balances change and then translate that into a cash flow statement. Note how I also brought in the income statement information, 100 minus 61,000 in cost of goods sold minus 27,000 in other expenses equals your net income of 12,000. And then I wanted to show you how our retained earning balance increased. We started with 24,000. I added my 12,000 of net income, subtracted out 3,800 in dividends as part of my facts here, and ended up with 32,200. Mainly when you do these assignments, you want to compare the balance sheet, go line by line, and then create a cash flow statement. But you do want to pay attention to this data just to make sure that the information in the balance sheet makes sense. For example, I bought equipment with cash for $9,000. Well, look at your equipment balance. It went from $102,000 to $111,000. That makes sense to me. We paid $10,000 on the long-term note payable. Look at your note payable balance. It was $48,000, went down to $38,000. That makes sense. Issued new stock for $20,000. Look at contributed capital. It was $60,000, increased to $80,000. Declared and paid a dividend. We just put that in our statement of retained earnings, $3,800. And then depreciation expense. That's going to be a key item there. We're going to need that $6,000. But look how that matches up. Look at your accumulated depreciation. How it went from $30,000 to $36,000, which is an increase of $6,000. These are just some other expenses. You won't need that information. And your accounts payable, basically what that's saying is if your account payable balance goes down, that means you paid cash for it. So let's get to this. The first thing I'm going to do in Excel here is I'm going to find the changes. So I'm going to take my 2013 balance and subtract it from my 2012 balance, and it gives me a change of 26,000. So my cash increased by 26,000. And then all I got to do is drag this down for all my lines, just hit on that little bar there, drag it in, and that formula carried straight through, so I don't have to do all the math. Excel kind of was my friend here. Gave me the changes for every single account. If it's negative, that means the account decreased. If it's positive, the account increased. The other thing I did is I put a type in here, just kind of like we did in our first assignment. Just label each balance sheet line to identify where will this go on our cash flow statement. And I always use cash as a type of cash because the whole cash flow statement is trying to get us to that $26,000 change in cash, and we'll show you that later. Accounts receivable is a current asset. Current assets will be in the operating section. Inventory is also a current asset, which will be an operating activity. Property and equipment is going to be an investing activity. Accumulated depreciation will be operating because we're going to add depreciation expense in our operating section of the cash flows. Accounts payable will be operating because that is a current liability. Wages payable, operating, current liability. Notes payable will be financing. A long-term liability will be financing. Contributed capital would be financing. And retained earnings will be part operating, part financing. The operating part would be that net income increase of 12,000, and the financing part would be my dividends of 3,800. So now we have these categorized. We have our changes. Let's plug them into our cash flow statement. So when we do the cash flow statement, I'm also going to bring up another sheet here. These are my rules. I need to start with net income. So let's plug in net income. And in my data, my net income was $12,000. And now my other rules are going to tell us what to do in this operating section. The next thing you want to do is you want to add your depreciation expense. Once you put your net income in, add your depreciation expense, then go line by line on the balance sheet. So let's do that depreciation expense now. And we'll find that here, depreciation expense. And if I go to my data, my depreciation actually is still in the problem sitting here. How much is our depreciation? $6,000. So add that in as a positive number. $6,000. Next step, according to my rules now, is to analyze my balance sheet items, so any of my current assets and current liabilities, see if they increased or decreased, and then follow my rules to determine whether to add or subtract. So let's go to the balance sheet. First operating item, accounts receivable. I want to ask myself, did it increase, did it decrease? Well, it decreased by $2,000. It went from $29,000 in 2012 to $27,000 in 2013. A decrease of $2,000. So my label is going to be decrease in accounts receivable. On your label, tell what happened. Accounts receivable decreased. Then go to the rules. Accounts receivable is a current asset, it decreased. A decrease in a current asset needs to be added. So we'll put the change in as a positive number. So my $2,000 change in accounts receivable right here is going to be added to my net income, put it in as a positive number. So my decrease in accounts receivable means add that amount to the net income. Next current asset or current liability, merchandise inventory. As I said, I already labeled that as an operating. What happened? Decreased by $6,000. So I have a decrease in inventory. So we have a decrease in merchandise inventory. By how much? $6,000. Do I add or subtract that? Go to your rules. Decrease in current assets, add it to net income. So we take this $6,000 right here, and we're going to add that as a positive number. Okay, go back to my balance sheet. Next, current asset or current liability. We already did our depreciation. The $6,000 was already included as the first item. So let's find the next balance sheet item. Current liability, accounts payable. Here's one. Accounts payable increased by $3,000. It went from $22,000 to $25,000. So let's put that. It increased by $3,000. So we put an increase of accounts payable as my next line. Increase in accounts payable. Tell what happened. The balance increased. Then go to the rules. Accounts payable is a current liability. An increase in a current liability we add to net income. So I'm going to put that in as a positive number. So the change in accounts payable, that $3,000, will be put in as a positive number. So the increase in accounts payable, positive $3,000. Look for our current assets, current liabilities, wages payable, last one. Wages payable went from $1,000 to $800. It decreased by $200. Wages payable decreased. Put that in as your label. Decrease in wages payable. How much did it decrease by? $200. What do I do with that decrease? It's a current liability. Decrease in current liabilities, we subtract. So this $200 decrease I'm going to put in as a negative $200. So now what I did is I took my $12,000 plus the $6,000 plus $2,000 plus $6,000 plus $3,000 minus $200, and that's going to equal $16,800. Actually, the $12,000 plus the $16,800 will equal $28,800. And that $28,800 is going to be net cash provided by operating activities. So this right here, this is subtotaled out to $16,800. All five of these lines subtotal out to $16,800. Add that to your net income, and that gives you $28,800. And that's net cash provided. If this number was negative, then you would use that used in. But since it is a positive number, we use net cash provided by operating activities. Now for the investing section. Let's look at our rules for investing activities. What we're looking for basically are any long-term assets and any investments. So I'm going to subtract any cash paid for purchases of those long-term assets, property, plant, equipment, intangibles, and I'm going to add any cash proceeds if I sell those things. I'm going to subtract cash if I paid for short-term, long-term investments, add cash if I sold long-term or short-term investments. You're basically saying, what does my bank account do when these events happen regarding the long-term assets? So if I look at my balance sheet, basically all I see on these long-term assets is property and equipment. It's the only one I have. And it increased by $9,000. Why did it increase by $9,000? Look at your facts. We bought some equipment. Bought equipment for cash. So I got this property and equipment account. I bought equipment. I need to put that in my cash flow statement. So my cash payment, it was a cash payment to buy my equipment. How much did I pay? $9,000. Let's go to my rules. Any cash paid for purchases of property, plant, and equipment, I'm going to subtract. It makes sense. I paid the cash. I need to subtract it from my bank, from my cash balance. So that's going to be a negative amount. So anything you pay in here, you're going to make as a negative amount. Anything you sell, you'll have as a positive amount. According to our balance sheet, that's the only long-term asset, that's the only investing activity that we're concerned with. So we have a negative $9,000 in investing activities. That total, we're going to have to say net cash used because it's negative. If this was positive, I would use net cash provided by investing activities. Here we're going to use net cash used in investing of $9,000. Finally, financing. What are my rules? Here they are right here. Add cash proceeds from a stock issue. So that's if your common stock, additional paid-in capital, contributed capital from a bond issue or from borrowing. So if I borrow money from the bank, that's going to be a financing activity. And I'm going to add that. I'm going to subtract cash if I buy back stock because I paid money for it, or if I repay for a loan or a bond. If I repay that loan, that's money that comes out of my bank. And I'm also going to subtract any cash paid for dividends. So I'm going to look for those things in my balances. Let me start on the balance sheet here. My notes payable, I have a financing activity because that changed. Notice how my notes payable went down by $10,000. Why did that go down by $10,000? Look at your facts. Paid $10,000 on the note payable. So we decreased our note payable, we repaid the loan, so that means we have some cash that went out of the bank. So let's make this cash payment on my long-term note is going to be a negative $10,000. My rules again say subtract cash paid for any loan repayment. So notes payable went down. I repaid a loan. Let's subtract that $10,000. Let's go back to my balance sheet. Contributed capital. Hey, it went up by $20,000. You know how that went up by $20,000? New investors gave you $20,000. So that's a cash inflow. When we go back to our rules, add cash proceeds from a stock issue. That would be new contributed capital, which is common stock or additional paid-in capital. So we're going to add that cash proceeds. So let's see. Cash receipts from issuing stock. Sounds good to me. How much was it? $20,000. Oops, not there. Right there. $20,000. And you also can find that in your facts. Here, we issued new shares of stock for $20,000 cash. The bank balance went up when you do that. Finally, financing activities. Subtract cash paid for dividends. I think our problem has some dividends in it. If we go in here, we declared and paid a $3,800 cash dividend. We paid it. That's cash out of the bank. So let's see, cash payment for dividend. It was $3,800. Put it in as a negative amount. $3,800. $3,800 is my cash dividend. So my financing net, negative $10,000 plus $20,000 minus $3,800 equals a positive $6,200. That total there is going to be net cash provided by financing. It's positive, so the financing activities gave us cash. That's a positive number provided by. If it was negative, you would use used by. Now, once we're done this cash flow statement, I have my operating cash, I have my investing cash, and I have my financing cash. If you add those three numbers together, that is going to be your net increase or decrease in cash. So let's do that here actually. We'll put, let's do the math. Alright, let's do the math here. We have our increase in cash. It's going to be my $28,800 cash provided by operating activities plus or minus my $9,000 cash from financing activities from investing activities, I'm sorry, plus my $6,200 from financing. So it's a $28,800 from operating minus the $9,000 from investing plus the $6,200 from financing. Let's total that up, and that's going to equal $26,000. So that's my net increase in cash was $26,000. The $28,800 minus $9,000 plus $62,000. Then what all I want to do here is put in my beginning balance, the January 1st cash balance, which was $18,000. So plug that in, and then what will happen is my December 31st cash balance becomes $44,000, which matches what's on the balance sheet. So now we have a completed cash flow statement. If you have any questions, send me an email. Hopefully this makes sense, and hopefully this gives you what you need to get ready for the other questions on the assignment. Thanks.